Hello. Hey, everyone. Thanks for joining us live on X for the fourth quarter 2025 earnings. I'm Alesia Haas, CFO of Coinbase, and I'm here today with our co-founder and CEO, Brian Armstrong. And we're excited to include with us today a group of independent analysts who have large followings on X, and they're here to ask some questions of us. So we're excited to connect directly with you, our customers, our community, our shareholders, and potentially future shareholders, to talk about what we're excited about this quarter and answer questions. This is a live conversation, and we'll also be taking live questions from the chat. Importantly, we're not going to answer questions on when XYZ token. We can't talk about any specific customer cases, but if there's something on your mind, please drop questions in the chat. Before we get started, as always, I'd like to remind you that during today's call, we may make forward-looking statements which may vary materially from actual results. Any information we share concerning risks, uncertainties, other factors that could cause these results to differ is included in our SEC filings. So with that important legal disclaimer out of the way, it's time to kick things off. And first on our list, I'd like to invite at Coinbase Duck to ask a question.
Hi all, this is Coinbase Duck. By the way, happy Chinese New Year for those who celebrate. Today is actually Chinese New Year. So before I ask the question, just let me give some background why I wanted to ask this question. I have been a retail Coinbase investor over 4 years. Coinbase valuation has always puzzled me a little, especially in the bear market. And I believe we're in the bear market right now. Compared to 4 years ago, fundamentally speaking, Coinbase has been stronger than ever. We know Coinbase has been gaining market share. Coinbase is just not a front-end crypto exchange. It's a blockchain infrastructure play. It's a technology company. Prada has grown tremendously since 2024. Everybody loves the on-chain lending and borrowing. You guys have the best Bitcoin credit card, on-chain payment, AI agent. Even Base now is the best L2 on Ethereum. And over last year, you guys brought in the DEX trading. And I believe a couple weeks ago, you guys started to have prediction market as well as the stock trading, right? I actually bought a few Coinbase shares on Coinbase. Right. So from a balance sheet perspective, balance sheet looks better than ever. The revenue stream is now really diversified. If we can count, you guys have the subscription service, the stablecoin, the custodian fee, the staking. They now make up for much higher percentage of the overall revenue. So in my honest opinion, those are much higher quality revenue than the volatile trading revenue by itself, right? So I can make a strong case for why Coinbase should be traded at much higher multiple than its peers in the same category. But let me stop there. I think you get my point. So here's my real question. Why is Coinbase always misunderstood or underappreciated by Wall Street?
Great question. Well, dive in.
Yeah, I'll kick it off and Alesia jump in. I think you're touching on something very important here. We've been putting up great numbers the last 3 years. We've diversified the revenue streams. I think the company has never been in a stronger position, and crypto has never been in a stronger position as we see regulatory clarity emerging and more financial institutions and governments and retail investors jump in. We've now seen use cases emerge beyond trading. As you mentioned, stablecoin payments are taking off as the next big use case, and prediction markets, and you can kind of go on down the list. And so the financial system is going through this massive transformation, and there's really no better company in the world that's positioned to help make that a reality and capitalize on it than Coinbase. So I think to answer your question, I do think Coinbase is a bit of a misunderstood question. And the reason is that if you look at traditional financial services, the smartest firms are all leaning in and embracing this, right? You're seeing like 5 of the GSIB banks are now building crypto infrastructure powered by Coinbase. You can see on LinkedIn, many of the largest financial institutions are actually hiring crypto people. And so as regulatory clarity is emerging, we're seeing probably I'd say the smartest big financial institutions, like half of them or so are really leaning in and embracing it. The other half of them are still resisting it. And this is a classic kind of innovator's dilemma type situation where you don't go to the cab companies and ask them what they think about Uber, right? And you don't go to the horse and buggy makers and ask them what they think about the automobile. And so there's still a lagging half of the traditional financial system, and I think some of these investors, that they're just inherently skeptical of crypto because their whole careers have been built in the traditional financial system. Who is this? Who and what are these people, coming in and trying to build the next generation of it? They're just in default skeptical of it. And that is, just human nature, but it means that like the biggest disruptive innovations in the world have all followed this pattern, right? You can look at Uber, Airbnb, like self-driving cars, even like SpaceX versus NASA, or whatever kind of analogy you want to make. And so I think Coinbase is one of the most misunderstood companies on Wall Street because of the nature of crypto disrupting Wall Street, really. And the smartest ones are going to embrace it. The laggards are going to be left behind. And so it means that there's a generational buying opportunity, I think, still, while the world has not woken up to this opportunity. I mean, that's what you want to do as an investor, is be early and right. And so this is one of those trends that is still not consensus view amongst the traditional analysts. I'll just close with one final point, and Alesia, see if you have anything to add, which is, I thought it was interesting after we announced earnings, there was some negative headlines, but then our stock rallied and went up. And so it tells you that some of the traditional media headlines or the traditional analysts, I think, were missing the forest through the trees. Just as one small example, we saw these headlines get reported about, negative net income and Coinbase, and we tried to make it as clear as we could that that was largely due to unrealized losses on just crypto assets we were holding. And so you have to look at these adjusted net income numbers in addition to the GAAP numbers. And for instance, by the adjusted net income number, we were actually very profitable even in this kind of down market in Q4. So I think you have to look at what we say we're going to do. We've been very consistent and met all of the things we said we're going to do. Sometimes the analysts have their own view and their own models, and I just think that's a little bit of an outdated perspective. You should look at what the company says they're going to do, not what some analyst's model said they beat or missed. Alesia, what do you think?
I think that we are also becoming a large company, and we are finding broader crypto trading in line with broader macro news. And so we ourselves as a company are having the influence of many more factors than what we did 4 years ago when we were much more of a niche asset. So as we become more mainstream, broader macro trends affect us a lot more, and we have to take that into mind as well. But it creates opportunities, as Brian said.
Yeah, that's true. Actually, in every down market, there are opportunities. We've been buying back our stock, buying Bitcoin, just continuing to invest and build. So we actually don't mind the ups and downs. It creates opportunities regardless of the market conditions. But I do think with the diversification of the revenue, it'll just be a much more predictable business over time, and people will eventually, come around to seeing this point of view.
I agree. All right. Any other follow-ons, CB Duck, or should we move to the next analyst? All right. Next analyst, James Seffert, please. What is your question?
Hi, Brian. So I'm a research analyst with Bloomberg Intelligence, primarily covering the asset management industry, which means I'm very interested in your ETF business. You guys custody the vast majority of assets in crypto ETFs, but definitely in Bitcoin ETFs. You are basically the choice custodian for most institutions, at least US listed. I guess can you just comment briefly on the concentration and how seriously you take that concentration risk? And the other part of it is, as an ETF analyst, I'm constantly being told by randos on Twitter or X that this is all paper Bitcoin. I think part of that would be cleared up if people would disclose their Bitcoin addresses for these ETFs. That said, I understand why not everyone does it. Bitwise does it, some don't. Can you just explain exactly what's happening? And what would you say to those people who are saying that the Bitcoin isn't actually being held in custody and it's all paper Bitcoin that is going into these ETFs?
Yeah, sure. So I can start off, Alesia, add in. So I think to your first question, we do have pretty dominant market share in terms of custody for the ETFs. I see that as a strength. It's we're the trusted counterparty on the institutional side. I think we're far ahead there, and it's a great business for us. Some of the larger ETFs, they understand your concern about, I think, concentration risk, and so like any ETF, if they get large enough, they tend to diversify the custodians underneath. That's allowed other players in the industry to have get some market share as well, which we think is healthy and good. Last I checked, I think we're still around 80% plus market share on the ETF custody, and that's a good place that we're very proud to be. And these cold storage systems, I think we're the most advanced in the world on that. I mean, they're regularly pen tested. We've gotten patents on a number of this technology. We've hired some of the top cryptographers in the world, and we hire firms to come try to break into it regularly. As we've won these contracts with the largest financial institutions and governments, they come and audit it themselves. And so we're really proud of what we've built there. In terms of these paper Bitcoin balances, part of your question, to be honest, I've never quite understood that. My understanding is that these ETFs are fully backed by the actual Bitcoin. I mean, Alesia, do you have a sense of what people might be asking about when they say that? I haven't quite understood it.
Well, I think per the question, people really are looking for this concept of a proof of reserve. So they want to see the addresses so they can independently verify. But I think what we offer is for our custody business, it has a separate audit. We also issue what is called a SOC 1 and a SOC 2 report, which demonstrates that we have the controls and they're operating effectively to show that we reconcile back to the blockchain, that we have these addresses separately assigned to each of the ETFs, to each of our clients, quite candidly. In our custody business, every single client can see their assets on chain. The client can see that. We don't believe it's our job to disclose that for security reasons. We would never disclose addresses that we hold on behalf of clients. However, we can demonstrate through the robustness of our operational or legal proceedings that we are storing accurate balances for each of our clients that we hold crypto for.
Yeah, you're making me think that there could be a possibility where we provide that as make it possible for the client to disclose if they want proof of reserves. Mm-hmm. Yeah, but in general, they don't want us to disclose their proprietary information, and so maybe we can make it a tool available to them, but we wouldn't do it ourselves.
And they have the data. They know what their addresses are with us, but we would never disclose any client information without their permission. All right, next question. Eric Pan, looking to you.
Hey guys, this is Eric Pan, aka Ericnomics. Great to see you guys. My first question is that Coinbase recently pulled support for the drafted market structure bill due to it effectively banning rewards, tokenized equities, and a bunch of other things as well too. Some say that this will probably be the best that we'll get. But Brian, you have also mentioned that you rather have no bill than a bad bill. If the bill continues to be at a standstill and no progress is made, what are the real business impacts on Coinbase? So will you be a little bit more cautious on product rollouts or higher legal fees, etc.?
Yeah, sure. Happy to touch on that. So first, just one correction. We did not pull support for the bill. We were simply commenting that current draft of the bill we felt was unworkable for the crypto industry. There are subsequent drafts being iterated on every week. So, we've spent many years and $100 million plus on policy efforts trying to get this bill through. So I'd actually make the statement that there's probably nobody in crypto who has worked harder and longer on getting this bill through. So we are 100% in support of that. I do think it's important we get the right bill. And that particular draft, I think, had too many giveaways to the traditional financial system or some of their trade groups that were trying, in my view, to put their thumb on the scale and block their competition, which we thought was not good for America or our customers or the crypto industry. So we wanted to stand up and make that very clear. And I think it's caused everyone to come back to the table for another round of negotiations, which I think will end us up in a better place. So at this point, I'd say the crypto industry is united in their asks. Everyone who I've interacted with in the Senate and the administration is fully leaned in, working hard, trying to get this done on a daily basis. There's a continuing work going into this. And it's prompted some of the bank trade associations and the SIFMA and the bank CEOs themselves to kind of have useful conversations in some cases that have tried to get the principals in the room together to just try to understand what's happening. So there's less of a game of telephone with the trade groups. So I'm pretty optimistic that that's going to get done. In terms of business impacts, like I said, I think it's most likely that this bill will get done. The incentives are there for both the Democrats, Republicans, everyone to get this through, including the traditional financial system and the crypto ecosystem. But if it, for some reason, didn't go through, I think that we have a very favorable SEC, CFTC. We can essentially we would just continue to operate our business, essentially how we're doing today, but continue to seek regulatory clarity from the existing agencies. Now, if future administration, those regulatory heads could change. So that's the benefit of what Congress actually passing a law into statute gives you. It gives you certainty over a longer period of time. But the current regulators could also create established precedent, and that would be a fallback position. Like I said, I think the bill will get done. It's in everyone's interest at this point.
I just want to zoom back and remind everybody 2 years ago, we were trying to seek these rule clarity through the courts. And so we have 3 paths: through Congress, through the agencies, as Brian mentions, or through the courts. We've always been focused on getting regulatory clarity. We've been fighting for regulatory clarity longer than anyone else. And what's important right now, as Brian said, we are at the table. We think we can drive a win-win, and we are going to be at the table until we get these rules established one way or the other in the United States. All right. Next question. Austin Hankwitz, over to you.
How's it going, Brian, Alesia? Good to see you guys again. Want to give you guys a major shout out for hosting these awesome conversations with analysts that are not just on Wall Street, right? My name is Austin Hankwitz, co-host of the Rich Habits podcast, head analyst at Grit Capital. You said during your earnings call last week that you plan to expand the Everything Exchange to more countries around the world in 2026. My question is, what's the timeline, and maybe even more importantly, the regulatory roadmap for bringing equities, prediction markets, and commodities to international customers? And what regions are you prioritizing in 2026?
Yeah, so again, I'll start off. Thanks for the question. So you're right. I mean, the Everything Exchange is a very powerful idea. I think people maybe are still underestimating the potential of it as we get every asset class on chain and start to do novel things with crypto around perpetual futures and even 24/7 trading, et cetera. I think ultimately this could be one of the largest exchanges in the world in any category, not just crypto. So I'm really bullish on that idea. And then you're correct. We need to make sure this is not just a US phenomenon. We have our international exchange as well, which has gotten a lot of traction, and especially around derivatives over the last year. We've seen good growth there. And so there's lots of countries that we are available in today. Now, if you go with each asset class, like whether it's prediction markets or tokenized equities, I think we're seeing regulatory clarity in the US emerge there. There's then, I would say, the next, 10 or 20 major markets where those regulators, we have policy presence in the local office in many of these. We're going to have to go engage with many of them where we have existing licenses to make sure we're not running afoul of any rules. That's kind of a Coinbase taking a trusted approach, the long-term approach that we're known for. And then I think there's another 100 countries or so that don't have any. It's basically not. It's not disallowed. It's not officially allowed. There's no statute around that. And some of those countries we may be able to take a more forward-leaning approach and just launch. And then if the regulator has some issue with it, they can always reach out to us and we can respond. So it'll be a little bit of a case-by-case basis as we expand globally. And one thing I should just finally mention is that I'm sort of describing our centralized exchange there, our centralized products. We also have a self-custodial app, the Base app, and I think that offers another path to get into a lot of the long-tail of countries with it's not regulated the same way as a centralized financial institution because it's self-custody. It's really more like a software product that people can choose to custody their own cryptos and other assets. So anyway, we're working hard on expanding it to more countries. I don't have an exact timeline to share with you, but we'll be publishing those as they become available. Alesia, anything you want to add?
Nope, that's the right approach. Thanks for that, Brian. All right, next question. Architect 9000.
Hi, Brian and Alesia. It's great to see you again, and I appreciate you taking the time to engage with us in this forum. As a developer, I'd love to ask you about the new direction for Base App, but as a resident of Las Vegas, the question on everyone's mind here is prediction markets. During the Super Bowl, the strip was plastered in Kalshi big game ads, and I think that was sort of a wake-up call for the casinos and gaming commissioners here. Just hypothetically speaking, do you see a future where Coinbase might partner with the casinos to bring prediction markets to their sports books, perhaps like in a consortium approach, as you did with USDC? Or do you think that an explicit partnership with the gambling industry might be a little too toxic for the Coinbase brand?
Yeah, interesting question. I hadn't thought about it too much before. It wouldn't be my first instinct to necessarily go partner on the gambling side, just for the reasons you mentioned. But I do think what's going to happen essentially is that the CFTC and the state regulators around gambling or otherwise are having a little bit of I guess, a jurisdiction question at the moment. And the law is actually quite clear on this from our point of view. The CFTC has exclusive authority as a federal regulator. And so if you go to the federal regulator, you get state preemption essentially, and you don't need to go to each of the 50 states for this. Now, I'm sure that'll get debated in the court, and it may even ultimately go to the Supreme Court, but we feel that it's most likely the CFTC will win on that because the statute is quite clear. So I don't know if there will be a need to partner necessarily locally in some of those areas if it was from purely like a licensing point of view. But from a customer distribution point of view, I don't know, maybe. I guess the last thing I would just say is that for me, I know a lot of the activity on prediction markets involves sports, and I'll leave it to the courts to figure out what that means and where that should fall. I think there's a lot of other aspects of prediction markets which I think are very powerful and intellectually interesting, both as a check and balance against traditional media, telling you something which may or may not end up being true, as we saw in past elections, which Mike Seelig, the CFTC chair, just recently referenced today in his comments, or even economic indicators, figuring out what policies should be implemented. There's a lot of positive externalities in society from prediction markets, I believe. Or just, one more example would be people trying to figure out, like, should I route my ships through the Suez Canal? Or, how likely is it that it'll be reopened or the Houthis might attack, right? So these are giving you signal about what is likely to happen in the world. And that's very powerful. It has a lot of positive externalities in many different ways. So that I think is even more important than the gambling aspects, but I understand, people want to bet on the big game too. Alesia, anything you want to add?
No, I think that's the right summary. I think that, again, we think the path for regulation and legislation is clear, but it's going to be fought at a level above our pay grades, or at least my pay grade. And then we are always open for business development. And as we said before, we seek to partner, we seek to acquire, we seek to grow organically, and we are always looking to serve our customers in the way that best gets the maximum number of products and services and experiences into customers' hands. So if that opens up a path through BD, we would explore it on the merits at that time. All right. We're going to take one more question here. Stock market news. Over to you.
Hi, I appreciate you guys for allowing me to ask the question. Appreciate you guys for doing this as well. My name's Evan. I run the stock market news page, a part of the Wolf Financial team. I wanted to ask you guys about stablecoins and, kind of what you are excited for in that direction this year specifically. I'm curious your thoughts around like Wall Street adoption, mainstream US adoption, that continuing. But, if there's any other parts around the world or anything like that, but I want to hear your thoughts around stablecoin adoption, maybe how that might impact your business in 2026.
Yeah, well, again, happy to kick off and Alesia add in. So, stablecoins are really on a tear, and I think people are still probably underestimating the potential of a digital dollar. It has clear product market fit. I think it started off by people in many places around the world simply wanting a refuge from inflation with their local currency. So there was high demand for the dollar. This was the easiest way for them to get it. But it quickly expanded from there. And we've now seen B2B cross-border payments be the biggest emerging use case in stablecoins. Now, it's of course used quite a lot in DeFi as well and DEX trading. But payments is a very exciting emerging category. And so Coinbase has been building products here now for quite some time, including, with Coinbase Business, we allow companies to do invoicing and payouts to developers or contractors. Even institutions and retail are holding USDC as a way to earn rewards, which is just a better financial product in my view. If you want to be making payments, you might as well be earning rewards on it while those funds are at rest. So I think there's a ton of potential there. Alesia, anything you want to add on the stablecoin thing specifically?
Yeah, I would just share that over history, we've seen tons of innovation for how we all move dollars around the world. And this is going to put my age in question, but like when I was a kid and we traveled, we went to the bank and we got our traveler's checks. Those have gone the way of dinosaurs, right? Now, if you look at history and you see like Apple Pay adoption, fast, cheap, easy, just like click, click, click. Think about now this opportunity for stablecoins around the world. Just it moves money at the speed with less friction, with more interoperability. So we believe that today, maybe half of 1% of GDP runs on crypto rails, maybe less, maybe a little bit more. But when you think about the benefits of fast, cheap global money, we don't see any reason why we're not going to see 10, 20% of money movement on this blockchain crypto rail technology. Now, we believe deeply in interoperability. We believe deeply in network effect, and we believe deeply that it's important to give customers what they want, which is fast, cheap, global money that then can earn a reward. And that's what we're fighting for. That's what we continue to try and build towards with our product set.
Yeah, right. It's probably a good place. I mean, to wrap, unless we have any more questions, but I think, yeah, it's just one more example of how crypto is updating the financial system. So, if we could now send money instantly anywhere in the world for less than 1 cent and less than 1 second, I think we'll just see an order of magnitude more payments. And just, one other area we're seeing this emerging is around AI agents. Actually, like just in the last month or two, Coinbase has been putting out a lot of good tools for AI agents to add stablecoin payments, and that's been emerging really quickly. So I think we're going to see an order of magnitude more payments happen every day once the friction has been lowered. And stablecoin payments are by far the best way to pay. It's cheaper, faster, more global than any other payment rail.
All right, we're going to take one live from the chat. So at the Raj Ali, I'm going to ask this one because they're not live with us on the call. Brian, what do you ultimately envision the Base app as? What is the Base app?
Yeah, I think of the Base app as the self-custodial version of the Coinbase app. And it's gone through several iterations. When we announced the latest version of it back in December, we had another angle we were testing in there around social tokens like creator coins, content coins. To be honest, I think we were too early on that, and we got some good feedback from the community about that aspect of the app specifically. But the other features in the app are well liked and well used, and you have the ability to do payments, you can do trading, you can do messaging. There's an identity system that's built in, and we're adding support for more and more blockchains. So you should be able to get every asset class, kind of like the everything exchange as well, right? I think we're going to see tokenized equities in there, commodities, like there'll be prediction markets that are totally on-chain native as opposed to just, the more centralized versions that exist today. So you should think of the Base app as the self-custodial version of the Coinbase app. And it's very complementary because it allows us both to make the onboarding much lower friction when it's self-custodial. It allows us to launch in a bunch of geographies that a centralized regulated financial product is more difficult to launch in. So there's a geographic complementary piece to it. And then it also allows us to launch, I think, really just novel products that are useful in every country, even in these developed markets. So you're seeing a lot of the frontier development happening on self-custodial wallets. It's just kind of like a next generation architecture to build on. And in the past, I think it was a little too difficult for the average person to use. They were worried that if they lost their 12-word phrase, they would lose their money. The tools for that account recovery, simpler onboarding have gotten easier and easier. And I actually think that there's just a ton of potential in these self-custodial apps, and especially as they become full-featured as sort of like an everything exchange or a super app as well, kind of like the retail app. So we're going to keep investing in that, and it's been getting a really good reaction from customers.
Amazing. Well, I'm going to take that as the close, Brian. So I just want to thank everyone for joining us today. I want to thank all of our independent analysts, our podcast hosts, our individual retail investors who just have such a really thoughtful approach to looking at us for asking questions here with us today, as well as for the live questions on X. And the top voted, we answered the top one. So thank you all. Look forward to seeing you next quarter.
Appreciate it. Thanks, y'all.